Good Friday. It's your boy PB, coming at you live with another episode of PhatBear Alpha. Let's dive into the market madness. Bitcoin's been acting like that guy who sprints the bar, but then just orders of water. It tapped that juicy 97K resistance level like it was ready to moon, only take a breather and say, I'm good for now. The total crypto market cap is chilling at a cool $3 trillion, up a modest 0.46%. Not exactly a rocket ship. But hey, at least we're not bleeding out. Trading volume over the last 24 hours? A met 80.3 billion, down 4%. Bitcoin dominance ticking up a smidge to 63.8%, a 0.03% nudge. The fear and greed index is at 55, up 4 points, sitting in that neutral zone. Not too greedy, not too panicky. For alt performance, the winners are Turbo, Hadal Protocol, Immutable, and Vine. The losers are Movement, Initia, Pudgy Penguins, and Alpaca Finance. For our macro, I've got some fresh economic tea from Hong Kong to spill. Hong Kong's Q1 GDP grew. And guess what? It's flexing harder than a Bitcoin bull at 97K. The economy grew 3.1% year on year, beating the pants off the 2.1% those so-called expert economists predicted. 9 quarters of growth in a row. Hong Kong's out here acting like it's 2018 again. On a quarterly basis, it's up 2% from last quarter's 0.9%, which is like going from a jog to a sprint. What's driving this? Exports of goods are up a spicy 8.7%, thanks to some solid external demand. And tourism's back in a big way. Visitor arrivals are pumping up the service sector like a meme coin on a KOL shill. But here's the kicker. Private consumption took a 1.2% nosedive. Apparently, Hong Kongers are tightening their belts and crossing the border to shop in mainland China, where the strong Hong Kong dollar stretches further. Gotta love those savvy shoppers dodging the local price gouge. This GDP pop is nice, but Hong Kong's not exactly crypto's North Star. Plus, the Hang Seng Index tanked 1.9% after news, so the market's not exactly throwing a party. Up next is our crypto news. The first story is about Caldera. Caldera's gone and snagged itself a shiny new leaderboard on the Kaido platform. If you're not familiar, Caldera's this metal air thing. Fancy talk for a rollup framework that's supposed to make Ethereum scaling as smooth as a Moon Boy's DMs. Now, Kaido, the AI-powered InfoFi darling, has rolled out a Yapper leaderboard to track who's shilling about Caldera on X. Caldera themselves are hyping it like it's the second coming of DeFi. Yap early, yap often, they say, with a winky face that screams, you know there's an airdrop carrot dangling here. But let's keep it 100. This is SocialFi dressed up as community engagement. You're not just sharing alpha, you're farming points in a system where smart followers and retweets weigh more than your actual insights. Kaido's AI might be smart enough to sniff out spam, but when Binance CZ and Vitalik are duking it out for the number one yapper spot, you know it's less about wisdom and more about clout. Plus, Caldera's team is patting themselves on the back for not paying marketing firms to juice their yaps. Next story. Goldman Sachs is eyeing a big expansion in crypto trading. At the Token 2049 event in Dubai, Matthew McDermott, Goldman's global head of digital assets, basically said, we're ready to go all in as soon as the regulators stop harshing our vibe. They're looking to level up their crypto trading desk, dabble in crypto lending, and get real cozy with asset tokenization. You know, that fancy stuff where they slap real-world assets like bonds or real estate onto a blockchain and call innovation. Goldman's been flirting with crypto since 2021, when they launched their trading desk for cash-settled Bitcoin and Ether options and futures on CME. No direct crypto holdings, though Uncle Sam's rules keep them on a leash. They've also got this GSDAP platform for tokenizing assets, which they're planning to spin out into its own company in the next 12 to 18 months because, apparently, even banks don't trust banks to play nice with blockchain. McDermott's out here saying their clients, think hedge funds and big money players, are begging for more crypto exposure. Probably saw those Bitcoin ETF gains and got FOMO. Last crypto story. Hyperbolic's out here flexing their GPU rental platform like it's the holy grail of AI compute. They're screaming from the rooftops that they're offering high-performance GPUs at rates that make AWS, Azure, and Google Cloud look overpriced. We're talking NVIDIA H100s as low as 99 cents per hour and RTX 4090s at a measly 20 cents per hour. Their pitch? Tap into a global network of idle GPUs. Think data centers, mining farms, and your buddy's gaming rig that's collecting dust 19 hours a day. They claim this GPU Airbnb can slash AI compute costs by up to 75% compared to traditional cloud providers. Hyperbolic secret sauce is their HyperDOS, a decentralized operating system that herds these scattered GPUs into a coherent network, complete with auto-scaling and fault tolerance. They're not just renting you a GPU. They're promising a seamless experience where you can spin up an H100 or A100 in under a minute. No sales reps required. They've got 100K users, $20 million in series of funding, and a beta marketplace that's got researchers and startups salivating over prices like $1.30 per hour for H100 SXM GPUs. Now, we're diving into the DeFi world, starting with MapleStory Universe. MapleStory Universe, the Web3 love child of South Korean gaming giant Nexon, is finally unleashing MapleStory N on May 15th. If you've been living under a rock, MapleStory is an adorable 2D MMORPG that's been stealing hearts since 2003, racking up 250 million users and over $5 billion in revenue. Now, their blockchain arm, NextPace, is slapping NFTs and Avalanche's L1 chain onto it, turning your favorite pixelated grindfest into a DeFi playground. MapleStory U is hyping it hard, promising special events and rewards like coin mounts and opening party sets. MapleStory N keeps the classic side-scrolling vibe. Think defeating monsters, completing quests, and flexing your customizable hero. But now all your shiny in-game items are NFTs you can own, trade, or flex on a blockchain. They're calling it Reward Experience 2.0, which is corpo speak for you might actually make a buck while grinding. The game's got two tokens, an XBC, a fixed supply utility token for minting and merging NFTs, and NISO, an in-game currency you earn by playing and can use to create tradable NFTs. Testing phases already saw 31.5 million on-chain transactions and nearly a million wallets registered, with 76.2% of tokens spent in-game. That's some serious degen energy for a beta. Next story. Mitosis just launched their Matrix vaults on Morph L2, a shiny Ethereum Layer 2 with a hybrid scaling solution, part optimistic, part zero-knowledge rollup, all incubated by BitGet. They're calling the Zoatosis, which sounds like a crypto zoo where yields go wild. Mitosis is all about democratizing premium yields and making liquidity flow through DeFi. Morph L2 is their new playground because it's got this fancy hybrid setup. You can run complex yield strategies without waiting a week for your funds to settle or praying the network doesn't choke on gas fees. Morph's also got this responsive validity proof system, fancy tech that keeps things secure without slowing down the party. And they're not just building for today. They're modular designs ready to scale as Matrix vaults get fatter and more complex. But the real kicker? Morph's consumer-friendly angle. With Morph Pay, they're aiming to make on-chain finance as easy as Venmo for normies. Mitosis sees this as their ticket to bring Matrix vaults to the masses, pairing their yield strategies with Morph's slick interfaces. Last DeFi story. Paradex, the high-performance derivatives exchange built on Starknet's app chain, is making waves with their DIME token Airdrop. They're allocating a hefty 20% of the total token supply to a community airdrop. But here's where it gets juicy, and by juicy, I mean raise your rug pull radar. Paradex's Tokenomics give 57.6% of the supply to the community. Sounds generous, right? Until you see that Paradigm shareholders, the big dog behind Paradex's incubation, are pocketing a cool 13.5% of the supply, fully unlocked at the token's listing. Paradex is trying to spin this as a feature, not a bug. Say it's transparent and avoids a multi-year overhang of unlocks. Transparent? Sure, like a glass house full of dynamite. They're incubated by Paradigm, the institutional liquidity giant that handles 30% of global crypto options. So they didn't need VC cash, just Paradigm's deep pockets and connections. But that 13.5% free-for-all smells like a setup for a quick exit, leaving retail to hold the bags. The listing's happening on Paradex itself, alongside their Super Dex vision of trading perps, options, and spot with any crypto as collateral. Sounds slick. But if shareholders flood the market, that vision might look more like a liquidation candle. The airdrop guide today is about Union. Union's back with their App v2 update, and they're hyping it like it's a blockchain equivalent of duct tape, connecting L1S, L2S, rollups, app chains, you name it. Their testnet v2 is live and ready for D-Gens to stress test until it cries uncle. Union hasn't confirmed a token drop, but you earn XP through on-chain quests, like bridging tokens between Sepolia, Holski, Xisland, and others, and completing achievements on their dashboard beta. Early birds keep their XP if they farm now, and Xisland quests are teased as alpha incoming. Pro tip: transfers just need to hit the history tab to count, even if they don't complete. This is a testnet, so expect bugs. Union's devs are practically begging you to break it. If something glitches, they'll see it, but in-app reporting's not live yet, so you're screaming into the Discord void for now. That's a wrap for this Friday's PhatBear Alpha. Your boy PB signing off.